Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Are car taxes deductible in Connecticut? That's a question thousands of residents ask every year when they get that bill from their local town or city. The short answer is yes, they can be, but the real answer is a lot more complicated and depends entirely on your personal tax situation. Let's break it down. The car tax you pay in Connecticut is considered a personal property tax. On the federal level, you are allowed to deduct state and local taxes, and this includes personal property taxes. This deduction is known as the SALT deduction, which stands for state and local taxes. You take this deduction on Schedule A of your federal Form 1040, which is the form for itemized deductions. So, in theory, your Connecticut car tax payment is a deductible expense. However, there's a huge catch, and it's called the SALT cap. A few years ago, tax laws changed, and now the total amount you can deduct for all of your state and local taxes combined is capped at $10,000 per household, or $5,000 if you're married and filing separately. This $10,000 cap includes not just your car tax, but also your state income taxes and your real estate property taxes. For many Connecticut homeowners, their state income tax and property tax on their house already add up to more than $10,000. For example, if you paid $7,000 in state income tax and $6,000 in real estate taxes, you've already paid $13,000 in SALT. You can only deduct $10,000 of that, which means your car tax payment, even if it's $1,000, provides no additional tax benefit because you've already hit the cap. The other major hurdle is that you can only deduct your car tax if you itemize your deductions. The vast majority of Americans now take the standard deduction because it's so high. You would only itemize if your total itemized deductions, including things like mortgage interest, charitable donations, and your state and local taxes up to the $10,000 limit, are greater than the standard deduction amount for your filing status. If you take the standard deduction, you cannot separately deduct your car taxes. There is one exception to consider, and that's if you use your car for business. If you're self-employed or a small business owner, you can deduct the business portion of your car expenses, and that can include the property tax paid on the vehicle. This is deducted as a business expense on a form like Schedule C, not as an itemized deduction on Schedule A, so it isn't subject to the $10,000 SALT cap. So to recap, yes, your CT car tax is technically a deductible property tax, but you can only benefit if you itemize your deductions and if your total state and local taxes are under the $10,000 cap. For most people in CT, especially homeowners, the deduction is unfortunately lost due to the cap. Thank you so much for watching. Remember, this information is for educational purposes and isn't financial advice, so please consult with a tax professional for your specific situation. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more clear and simple explanations on taxes and personal finance.